Hi there, Trace. This is Brad Gilbert with the FX Market Insight for Friday, the 9th of October. All right, now as we roll out of that North American session, what did Thursday do for us? Well, pretty steady, stable day there on the equity markets. There are two noticeable things that I saw from yesterday, which are probably still in play. Oil rallying. Now, we talked about this earlier in the week. The other hurricane storm going through the southeast of the US, pushing oil prices up. Oil is up at $41 again. So that's something that was being played out over the last couple of days and has really come in. Yesterday, dollar CAD was starting to break down, and that has sort of followed through. The other key thing was, just because there's not much else on this page or not much else happening, is if I come back across to the Kiwi, actually. Kiwi, it's one of those weird ones, right? So actually, let me just get the Kiwi page up. Where are we? It's not going to work. I've got the one set up. Okay, so just coming back over here to the charts, we did see there was comments yesterday from the RBNZ, right, that they've talked about potential of going to negative rates. Now, they came out yesterday and said they're taking the actively taking steps to get this into play. So to me, that's a bull to a red rag. I would always sell very aggressively if a central bank was talking about going negative rates, especially when they've never done it before. So, but the situation was, we're not in normal market conditions. Normal market conditions, that falls 150 points. And the Kiwi, unfortunately, is in a situation where it was actually breaking down through support at the same time. So the perfect time for this to happen. But it dropped, 40 odd points, sat there and then just slowly squeezed higher as the dollar sort of turned around itself. So this goes to show two things: that, you never go in without a plan. That's obviously the first thing. But also just in these markets, we've been doing it a lot over the last probably 12 months, is taking smaller profits when you can. This is a situation where I really question whether I could take small profits on that, because I know what the move means for the macros, right? But you know what? This reemphasizes the fact that the macroeconomics are not really in play that aggressively, right? Otherwise, this thing would be 100 odd points lower. So, it's frustrating, but what you want to do out of these opportunities is work out, would you do the same thing again? And you know what? If it was down, if I was 40 points in the cash again, or 20 points, would I take the cash? You know what? I probably still wouldn't, because it was too big an opportunity. But it's easy to say in hindsight that you would, but I don't think that's a situation on that trade. And out of all the trades at the moment, like, everything's still pretty much within recent ranges, right? Aussie looks like it wants to have a crack at the top side. Kiwi, well, there is going to be stops above 66 the figure on short positions that were placed yesterday. If Aussie goes up, Euro goes up, and Sterling goes up, well, then that's probably going to be the situation. You still got to bear in mind, though, selling Kiwis a good thing, but probably not just against the US dollar, right? So looking for other crosses, in particular the Aussie Kiwi, looks like a much better trade, obviously, now. But even yesterday when I was looking at this, don't just get caught up in the US dollar, right? Because there's so many geopolitical impacts coming from the dollar side of things. This is a probably good situation where you can learn and go, you know what can I do to reduce my risk? Well, probably get out of the dollar just for the moment, right? You've got, and this is where I was saying the other day as well, when Trump, gets the coronavirus, comes out and says all stimulus packages are off, no more stimulus talks with the Democrats, we're going to blow up the whole joint. Of course, a day later, he gets his cronies in, they start sort of working back towards a deal. I reckon it's all about the mail vote myself, but we'll see how that goes. Dollar CAD, there's a bit of news in here. Rallies on higher oil, obviously with the storm system. Oil prices rally. Keep an eye on sterling. It's still the sleeping giant in my eyes. The EU, UK, if they come out with some sort of deal, I think sterling will rally. Probably a good opportunity to sell euro sterling. So basically, this is US politics, not quite at its peak. It's going to get weirder than this as we get closer to the election. But, Donald doesn't want to do any virtual debates. I can understand that. Apparently, he objected 140 odd times in the last debate. So he's got no interest in doing a Zoom debate. And that's going to be how it plays out. So as that US political scene sort of unravels, this stimulus package is is Trump's bargaining power to get things done. So I think from this point on, as we go forward, this actually probably gives me the answer. Would I take that Kiwi profit or not? Coming back and now looking at the backdrop of what we've got as far as geopolitics goes, you probably are taking some cash off the table at the very least, because as we go around each day through that North American session, we get a different story and we get a different update, and the markets are just toing and froing. So just bear that in mind as we go forward, right? So now if I just bring you back to the our daily market insight, just to wrap it up, where are those opportunities? Well, if you come back down, let me just scroll down a touch further. So the dollar CAD, right? So it has broken down on the short-term and long-term timeframes. If anything, potentially looking to sell on a rally. The fact that the geopolitics this week in particular have been so up and down, you're probably sort of maybe holding off, but dollar CAD looks like a sell on rallies. Kiwi to me is still a sell, and it's still breaking down at this point. It's almost going back up above that long-term sort of resistance again. But I tell you what, I'm going to be looking to sell Kiwi against other pairs outside the US dollar as we move forward, because it's still a very good opportunity, especially when they do go negative rates. Looking at where the major news is going to come from today, I really like the setup here, and this is what can give us an opportunity is Canadian employment numbers, right? So employment at this stage to the central banks is a key indicator of what's happening. So with that, we do have, when you come back to look at dollar CAD, you do have some levels to work with. Okay. Now the market is getting short dollar CAD as it runs, as oil rallies. Now this gives you a chance. It is a bit oversold. So if the employment numbers in Canada for some reason come out, massively weak, well, then there's an easy, probably short squeeze to the top side. And that's probably where you can get that sort of extra trade on. If the numbers are really strong, well, then it supports the current trend and we should see it just drift lower. So dollar CAD's probably the focus with those Canadian employment numbers coming out. The rest of the time, I think we're just gyrating in and out of these ranges. There's no clear momentum outside the US political spectrum at this point. All right. And that's what we've got with. It's been one of those weird weeks. The Donald has been at it up to his ears, and that's what we're just going to put up with just for the moment. All right, guys, have a good trade day and a good weekend. Cheerio.